When an employer and an employee in their relationship, a number of issues can arise when an unemployment insurance claim is filed. The goal of this video is to inform you of different issues that your business may have to address once an employer-employee relationship ends. The first thing to remember as an employer is that the full cost of unemployment benefits are paid by employers like you, not employees. So when a former employee files an unemployment claim, your company or organization really should review the claim and make sure it's on the up and up. This is your right as an employer. Your business is liable for unemployment insurance if you're a for-profit business with a payroll of $1,500 or more in any calendar quarter, or if you employ one or more people in each of 20 weeks. You're an agricultural employer with a payroll of $20,000 or more in any calendar quarter, or you employ 10 or more people in each of 20 weeks. You're a domestic employer with a payroll of $1,000 in any calendar quarter. You're a 501c3 not-for-profit organization with 4 or more workers employed in each of 20 weeks. You acquired all or part of an existing business. You're a government entity. You had a previous liability in Kentucky but have not sold your business or terminated your account yet. If you're one of these businesses, you're liable for both full and part-time employees. These include corporate officers receiving a salary. Even if they are officers of a subchapter S corporation or LLC, they may qualify for benefits if they lose their job through no fault of their own. You are not liable for family members in a proprietorship. This includes a spouse, parent, or child under 21. Family members in a partnership if the worker is a spouse, parent, or a partner's child under 21. Co-op students as long as they are receiving academic credit for the work performed. Insurance salespeople if paid solely by commission. Church employees whose service is part of the church ministry. And independent contractors. If one of your employees performs work in multiple states, you may be able to report all of the employees' work to Kentucky. Your business must be located here, or Kentucky must be the state where your employees' work is controlled. Some of the employees' work must also be performed here. However, if almost all of your workers' service for an extended period of time is performed in another state, you may become liable in the state where the majority of the work is performed. You should contact the Unemployment Insurance Tax Office in each state where work is performed to verify their reporting requirements. When a former employee files for unemployment insurance, he or she will receive a notice within 2 to 3 days. This notice informs them whether or not they are eligible for benefits based upon whether your business has reported sufficient wages for them. We calculate the weekly benefit amount using something called a base period. A base period is the first 4 of the last 5 completed calendar quarters. The weekly benefit amount is 1.1923% of the total base period wages reported. The maximum benefit amount is $415 per week, and the minimum benefit amount is $39 per week. But just because someone qualifies financially for unemployment insurance doesn't mean they can receive it. The manner in which they separate from their employer also plays a factor. To learn more about this issue, please view our Filing an Appeal for Employers video or consult our website for more information. As a business, you have a responsibility to not provide false or misleading information. For instance, don't participate in SUTA dumping. SUTA, or State Unemployment Tax Act dumping, is any number of tax evasion schemes employers use to obtain tax rates lower than their experience requires. This can include shifts in payroll from one employer to another, changing your business's industry type, or common ownership among different employers. If a business is determined to have participated in SUTA dumping, it will be assigned a penalty tax rate, the highest tax rate established by law. This tax rate will be for the year in which the violation took place and the 3 following years. If the business's tax rate is already at the highest rate, then it will be assessed an additional penalty of up to 2%. Also, any person who knowingly advises or assists in pseudo-dumping is subject to a penalty of $5,000 or more. Don't participate in employee leasing. Employee leasing is when a business other than the true employer reports the wage information. The true employer is the person or business for whom the service is provided. When reporting an employee's wages for unemployment purposes, make sure to include the employee's full wages. This includes bonuses, vacation time, sick pay, and cafeteria plans. Severance or termination wages are not considered wages as long as they are part of a plan provided for everyone in a business or all of a class of workers. If we determine your business has participated in pseudo-dumping, employee leasing, or not reporting full wages, you do have appeal rights. You must file an appeal in writing to the Unemployment Insurance Commission within 20 days from the mailing date of our notice. During an appeal, you don't need a lawyer, but may have one present if you wish. The majority of our appeals are handled during teleconferences between employers and us. A hearing officer contacts the employer and the division, then takes the evidence and presents it to a 3-member commission. They review and issue an order, which is appealable again, but this time to Franklin Circuit Court. All taxes paid into the Kentucky Unemployment Trust Fund can only be used to pay benefits. They cannot be refunded. If your company or organization is no longer in business, you can request that your account be closed. The reserve balance is maintained in case you begin employment again. After 1 year, you can request termination. This means your business will have no employment or no employment that meets the liability requirements stated at the beginning of this video. An account can also be inactive. The difference between an inactive account and a closed account is that an inactive account belongs to a business that has not closed. It just has no employees. We hope you found this video useful in determining some of the many issues that arise when an employer and an employee part ways. If you have specific questions not covered here, please don't hesitate to look for the answers on our website or contact your Kentucky Career Center.